Jay Mosley with the Daily Forex Update for August 22nd, 2014. It's midday Thursday. I'm doing this early because it's going to be a thin Friday, also UK holiday on Monday, and the market is going to be on the thin side. But we do have some key event risk, specifically Yellen speaking at Jackson Hole, and then Draghi several hours later speaking as well. As far as Yellen goes, markets turned defensive ahead of her. As I've been saying all week, the window for the dollar to go higher was probably through Wednesday afternoon to Thursday morning. Wednesday afternoon, we had the surprise FOMC minutes, so that kind of pushed it into Thursday. We have had some movement off that a new 132.41 low, but to trigger any significant stops, you have to get above 132.97, as I'll show you in a second. Otherwise, everything stays the same. We're in this nice down channel here, as I've been saying for the past month. The break of 134.75 showed a target initially 132.94. If that breakout holds, we'll be staying below it here. Next is 131 figure to 05. So 132.94 on a closing basis is your key focus on a daily chart. And if we go to the 1 hour chart, and you'll see here the FOMC minutes high. The bounce high here was 132.97. That is your key level on the upside. And downside, it's 132.41. Below that, 132.23, 61.8% of 127.45 to 139.96. And below that is the pivotal 132 level. So 132 figure to 40 is your kind of your support zone. But the risk is down as long as we stay below 132.97. Just in case, we got resistance here at 132.21, 133.21, 133.33, which was the breakout level, and up here 133.55, which probably hard pressed to get anywhere close to that. So my view on Yellen is if the euro dollar somehow bounces, it's thin. You can never rule out anything. And you can get through some stops. There will be sellers lying in wait. Bears do not want to see it above 133.33, and you probably see selling ahead of that should it occur. If we stay below 132.97, risk is down, and if we close below 132.94, risk is also down. So thin market always moves on these kind of events, but the expectation is Yellen to be dovish. Some say he's uber dovish, uber, whatever it is. But the surprise would be if she's not as dovish as people expect, and that would trigger a reaction higher in U.S. rates and higher in the dollar. So that's it for now. As I said, it's expect the market to be on hold until Yellen speaks, and at which point we'll have some fireworks, and then many will head to the beaches. Okay, so that's it. We'll see you tomorrow. By the way, one thing, we've come up with this amazing chart. If you want to see what drives the Forex market and its interest rates, this chart is great. We call it an exclusive chart. It's based on your fundamentals, but if you look at it and you follow it as we keep it up to date over time, we've uncovered a clue, and it's a good clue as to what's driving the Forex market and what should continue to drive the Forex market. So click on this link here and take a look. Good luck and good trading.